I have generated over $1.5 million in crypto without any trading at all. So if you want passive income in up, down, or even sideways markets, then stick around until the end of this video because I am going to show you exactly how to do it. Because most people think that mining is passive and they're not factoring in the fact that mining needs electricity. I guess about 0.13 euro per kilowatt, and usually this is actually costing you more than the profit it's giving you. It needs thick walls to noise isolate. It has industry level fans to actually take care of the heating that are quite loud in residential areas. And there's a constant difficulty increase. Okay, so when it comes down to getting these miners, it takes you months to get them. They need to get tested. And by the time you get them, you're already losing your competition against that idea of difficulty. Okay, because Bitcoin mining gets harder. That's where we refer to difficulty. Okay, it's basically like cleaning a room. It's like you're standing in a room and you're trying to clean a room, but there's this giant massive water crane that is always flooding this room and you're just trying to clean it, but essentially it's like a never-ending thing that you were fighting for. Okay, so you're tired of being overworked, underpaid, and overtaxed, but you're still getting a digital spin-off of that same problem at scale because you're mining harder and you're earning less money. You are facing custom fees, usually about 20 to 40% per unit of the price of a unit of a miner. And then each unit is actually about a 75 to 90 decibels loud, and it's taking months to actually get shipped your way. Pretty much of a headache if you ask me. Like, this is not passive income. It's basically just a bad deal. And more about that in a minute. So if you stick around, I'll show you exactly how to take care of this, how to find the antidote, and how to make money in up, down, and sideways markets. Now look, this is a study from December 2021. And the study reveals that if you were to come in with about a $1 million, you'd be sitting at a profitability of the miner on an annual basis of about a minus 4.9%. So the study reveals that if you as an individual would put $1 million inside of mining, you would basically get out minus 49K. So you'd be putting yourself at a loss at minus 4.9% per year, which is, it's even worse than inflation. Now look, here's a comparison of both. We have Bitcoin mining and we have Ethereum yield. Now, we're going to compare all the features and we're going to compare it for both. So if we look at the startup capital for a Bitcoin miner, we're usually looking at high startup capital. Just look up the prices for a Bitcoin miner. You will be amazed by how high that is. If you look at the startup capital for Ethereum yield generation, we're only looking at the gas fees. And honestly, there's a way around that. If you go to Etherscan, you'll see how on Sundays, usually you pay the lowest gas. So if you know this, you can get your Ethereum yield out on Sundays on lower type of gas fee days where you can pay less to actually get more. The setup time for Bitcoin mining is going to take weeks to months, whereas with Ethereum yield, it's going to be instant. You click the button, you pull in the liquidity, you start earning fees right away based on market volume, based on all these other factors. Then we have complexity. Bitcoin mining is quite hard. It requires software, it requires hardware, it requires all of these things to manage, to maintain, whereas Ethereum yield is more plug and play. You have it, it's on a laptop, it's on a secure device, you can get started right away. The energy cost for Bitcoin mining is high, the energy cost for Ethereum yield is low. You don't need all the fancy equipment, industry level heating, all that type of stuff. You could have yourself a $200 to $300 simple, cheap Chromebook, which has a state-of-the-art security, by the way. I suggest everybody to get that. That allows you to make it so plug and play. And then scalability with Bitcoin mining is quite hard. Get yourself a new device and more fans and this and that. Yes, you can outsource it with other types of businesses, so it's not within a residential area where it's almost impossible to scale. But still, I honestly don't believe that this is a really sustainable way of creating wealth. Then we have Ethereum yield, which is simple, right? Scalability of that is way more simple. And then if we look at maintenance of Bitcoin mining, it happens pretty often, whereas with Ethereum yield, there is basically no maintenance. Okay, you're going to check whether or not you're in range. You're going to be able to understand like, hey, am I facing certain types of loss, which I am going to explain in a minute. But then still, even if you lose money inside of Ethereum yield, you only lose money as opposed to holding. This is because of lack of knowledge. So as I'm saying here at the bottom, of course you need technology, and of course you need the right knowledge and the right guidance at the right time. That's essentially why I'm here shooting this video. Because if we talk about loss, I know you might be scared. I know you might be thinking like, crypto, it's so risky. It's not. The only reason crypto is risky is because people don't know what they're doing. They lack the right knowledge and the right guidance at the right time. So if this were to be a range in which I have a price of two assets within a pair moving, you can see how whenever I stay within this line and this line, I am generating fees. If I cross this line at the top, all of my assets swap into asset number A. If I cross towards the bottom, meaning the price goes down, I swap my assets into asset B. So if you go down below this video, you'll actually find a link that allows you to sign up for this training. And even the best part is, we don't need your email, we don't need your phone number, we don't need your name, we don't need all that stuff. You can just click on the link below this video. You don't even need to sign up. You can watch that training right away, because crypto is a real-time game, right? I make this video today, and by the time next week hits and there's another video, you're going to be either overwhelmed and you're going to always push back on your feedback and your implementation cycle. You're going to see something, never really apply it, or apply it when the opportunity is gone. That is costing you money. I want to give a quick shout out to myself and this team, because we do amazing stuff, right? You can see how people are saying this was absolutely the best experience. If you make it through that application form, you can see how people are saying, I've been a student in the program for close to a month and my experience has been unreal. You can pause this video if you want to read it in full. Not going to spend all my time reading, but like you can see, just gratitude, so much gratitude for everybody. Everyone was saying something different online. What do I do then? As a newbie, it was very scary, just so I referred to that fear a second ago. But Arno, Raymond, and Miranda and others have opened up a new world for me. It's different than what I had been reading there, and I have so much more foundation and security. I feel lucky about being there. Very positive community. The community here Arno created is amazing. Great kickoff call. I cannot recommend enough. Even if you pause the video right now, you can see all the amazing things at an amazing time they shared that. Okay, so I have nothing to hide. You're fully free in booking that opportunity right now. Now, a couple of questions I want to address in this video is like, hey Arno, but to make money, somebody else has to lose, right? This is a myth, and it's a wrong belief about crypto. You don't need others to lose money for you to make money, because Ethereum yield generation works pretty simple. If you think of Ethereum yield like renting out your home, you got a certain amount of money that you paid for your home and now you generate rent. But instead of selling your Ethereum, you lend it out to the network. So essentially, the majority of people inside of crypto are either buying crypto or selling crypto. We facilitate that with the name, which is trading. And in the middle of their trades, of their buying and selling, trading fees take place. This is where you can make money. So the Ethereum fees or the Ethereum yield that you generate is completely funded by the volume, the amount of trading or transactions that happen within a certain span of time. So if you're within a strong correlating pair with enough trading volume, others will trade. You could be sitting on an island, you could be sitting over at family, you could be sitting next to a pool. You'll still see how those fees keep coming in up, down, and sideways markets, as long as you stay within range and you know how to manage this all. We got software tech and solutions in place to do that. So you're telling me there's no way to lose here? Absolutely not. Every approach in crypto has pros and cons, but here the pros far outweigh the cons, okay? I promised you that I would dive into the nitty-gritty and the numbers. Well, this is that specific part. So there's two scenarios. Scenario A is where you hold a coin and the coin does a 4x, you're up a 4x. Pretty linear, right? Coin goes up at 300%, well, you just made a 4x. Initial capital with a 300% on top. That's a 4x, okay? Well, many people forget about that. They think 300% is a 3x. No, it's 4x, including the initial. Then second one is you provide liquidity, meaning you make fees on the Ethereum chain with that asset. Now this asset does a 4x, right? So if you are within a price set range that I showed you a minute ago, you can see how if the price shoots up with about a 25%, what happens there is you stop generating fees and your profits get cut off. So if this on the left-hand side would mimic that 4x, you would make that 4x. However, here, you would be making fees within this span of the range, which is what we call the range, right? But the minute we wig out, you would basically have 25% of an asset increase. You would stop making fees, and of course you would virtually lose about a 275%. The overhead gets cut off. That's why I'm always saying liquidity provision is amazing for markets that go sideways, even when markets go up, but you need a rebalancing strategy in place. You need to make sure that whenever you see the price wigging up or wigging down, you can get out of your position and rebalance again. So that 25 on top and 25 on the bottom dynamically moves alongside of you being in. And again, this might all sound complex. That's why I guide people. This is my true passion. That's why I make videos like this to share you the gist of it. But as complex as this all might sound, it's actually something that I had to teach myself too. And it's actually something that I teach to people even in their 70s, 80s, 60s. If they can, you can do it as well. Now, if it's so easy, Arno, why is not everybody else doing this? Well, this silly goldfish, right? This is the mentality people have. Isn't this shocking to you? How we can see assets on the blockchain. This is an actual random transaction that I clicked on Dex Screener. You can see how people think one day, I am buying into this asset and now I'm selling and now I'm buying and now I'm selling. Don't you think that people like Warren Buffett and Ray Dalio would be criticizing this? Do you really think that the wealthiest individuals in crypto have this type of a market behavior? Buy, sell, buy, sell, buy, sell. These people are looking at prices every single day, doing nothing but being emotional, completely tied to the outcome of their investments. And honestly, if you are generating fees, you should not be in a position like that. So people lack the right knowledge and the right guidance at the right time. The reason I run a paid community and the reason I have this mentorship program and a mastermind is because of confidence and certainty. Giving this education on a weekly basis is not just allowing them to make more money, it's allowing them to stay comfortable. Because now, whenever they have this reason of saying like, oh man, I'm out, there's a community that backs them. It's not just them, it's also for me. This intellectual knowledge that is collective is growing with the day. So we learn more from each other every single day, okay? So most people lack this idea of cyclical timing. They get into random inflationary coins. They get into meme coins that get born today, die tomorrow. It's one big mess. Now, to my fellow Americans, you guys are amazing. However, a thing that I notice in the States is you got to check my pillow and actually take it pretty seriously, because it seems like 84.8% of you is not subscribed to my channel. You're just watching my videos, probably with a bunch of other videos on YouTube, and you think, well, yeah, maybe one day. Hit that subscription button, because every single time when you miss a video on my channel, you are missing a direction that you might need to crush this cycle. We'll get into the how and the why as well. How do you do liquidity provision? There's a platform or a website called Uniswap. This is not shady. This is not fishy. This is not having any withdrawal locks or things to be afraid of. It's one of the leading liquidity provision apps and swap platforms. However, for swaps, I personally love to use CowSwap. It has like a DEX aggregator. The easiest way to put this is if you were to book a flight ticket with a party that with an airline that you always use, you would go to Uniswap because you trust the airline. With CowSwap, however, it would look for all different types of airlines and give you the best prices. So CowSwap is basically comparing decentralized exchanges and giving you your best bang for your buck offer, making sure that your swap is actually the cheapest, often even giving you money back for swapping asset A into asset B, meaning changing asset A into asset B, Ethereum into whatever type of coin, okay? And then for liquidity provision, I suggest to use Aperture Finance. It has automatic rebalancing, so you don't need to babysit your money all day. Now, again, I'll stress this, the right knowledge and the right guidance at the right time, it matters. Why? Because you need to get into assets that have strong correlating pairs. Ethereum, as opposed to another asset, that are very much aligned, okay? If they're not aligned, you'll see wigs that get you out of the range, you won't make any money, and even worse, you'll get divergence loss. You need solid trading volume within those pairs to be able to make enough money. Otherwise, the APR is going to be very low, and you're not going to make enough money in the pool to be able to outpace inflation, which we heavily do. Another thing is you can see those pairs on a decentralized exchange screener. It's basically like a website called Dex Screener, where you can see all charts and you can set notifications on certain price levels, so you know exactly when to get in, when to get out, when to check your liquidity position. This is a life hack. I use it. I love it. Then the next one is proper exit strategies. I love to look a lot at timing, but I also love to look a lot at indicators like the business, like the ISM business cycle, like the M2 total liquidity, like the alt season index. Like there's a good bunch of indicators that you can use to see, okay, besides time, besides averages, cyclical, time wise, you can also look at these indicators to understand, okay, this is where we're at, this is where we need to go. There's going to be two videos on top of the screen right now. One is going to be about why I don't believe in trading, and then there's going to be another video below that. Make sure to check these videos. Have an amazing day, and if you did not click the pillow button, make sure to do that right now. See you soon.